I often get the question from subscribers here on YouTube, what do you look for when looking for an entry in the markets? Entries are a very hot topic for new traders, especially people who are just getting started in this. They say, okay, well, it's great, that you can identify trends and things like that, but what actually gets you into a trade? And I'm going to do my best to answer that question in today's video. So before I get too far into it, make sure to subscribe down below if you're new for more free trading content. And without further ado, let's get started. Okay, so I've got the AUD USD here pulled up. That is the Australian dollar versus the US dollar. And I want to talk a little bit about some theory or some ideas as to what I would look for when looking for an entry. Now, entry, like I said, entries are really, really hot topics. Everybody wants to talk about when to get in, how to enter the market and experience as little drawdown as possible. And I'm going to try and, like I said, answer that as best as possible. The name of the game for me when talking about good entries come with, for me, confluence, okay? If you are new to trading and you've never seen that word, or you've never heard of that word before, the idea of confluence is basically aligning multiple factors in your favor before taking a trade. Now, I should state there is no perfect style of entry. No matter how much you try, no matter how much you search for the Holy Grail, when it comes to trading, the Holy Grail by itself does not exist. To me, entries are something that you really have to take with a grain of salt, because no matter what you do, it's not going to be perfect. But with that out of the way, the main idea for me excuse me, is to look for opportunities in which I can align as many factors in my favor as possible. Let's say, for example, that you have, X, Y, and Z, and all of them are telling you that you should be buying the market, right? If all three of those things tell you that you should be buying the market, that's a better signal than if you had just one of them telling you should buy the market, right? So what exactly are those things? Okay, well, here we go. So for me, what that usually means is it starts with a simple trend. For me, a very easy way to identify a strong trend is to use these colorful moving averages that you see on the screen. There's nothing magical. There's nothing super fancy about them. All I've got here is a 50 MA, a 100 MA, and a 200 EMA. Sorry, simple moving average. All three of these are simple moving averages. And so what I'm looking for here is I'm looking for all three of these to be lined up in the same direction. So what I mean that is this 50, which is going to be our fast moving average. By the way, these are not magical numbers. You could use a 20, you could use a 40, whatever you use. These are just general moving averages that I like to use. And then you've got slower ones, right? So the 200 would act as our slow moving average. And then you could, call the middle one here the medium moving average, if you will. So the main idea here, the main focus is just to see that all three of them are lined up. What does that tell us? Well, that tells us that, by my definition here, that we have a strong upward trend. That gives me sort of a buy signal. But that doesn't tell us exactly where to get in, okay? So the next factor here is for me, from a technical analysis standpoint, we're going to talk more about confluence in a moment, but the next confluence factor that I'm looking for a technical setup is a pullback. Okay, I like the idea of buying discounts. Now, there are all sorts of lines of thoughts when it comes to trading. You've got some people who they like to trade breakouts, they like to trade reversals, they like to trade pullbacks. For me, I am mostly a pullback trader. So I'm looking for opportunities in which we have a market that is moving up impulsively, correcting, and I'm looking to gather my stuff and jump on the train here on the pullback to try and catch the next move. It doesn't always work out perfectly, but that is the general idea that I'm looking for. So how do we spot pullbacks? Well, very similar to our trend, I'm usually looking for pullbacks to moving averages. You can see that in this example, we've got lots of scenarios in which the moving averages are being bounced off of as the overall trend continues to the upside. So I'm looking to get in on a pullback. For me, moving averages are one tool. There are multiple ways to spot a pullback, and probably my favorite way is to use support and resistance, okay? Or supply and demand, whatever you'd like to call them. But the basic idea here is that we're going to be marking areas on the chart in which we can spot strong levels of breakouts, strong levels of areas of demand, right? So what we could see here is that, you know, even a fairly new trader could probably spot that when we came into this area, you had lots of scenarios in which price came down to that level and buyers stepped up to push price higher, right? Multiple signals there showing buyer support. My favorite thing here is when we are in an upward trend, I like to see levels of resistance being broken and then buying them as they retest. Here's a really quick example of what I'm talking about here. Let me just see if I can clear up this chart a little bit and we'll zoom in here. Okay, check it out right here, right? So for me, an entry using support and resistance might look like this. Okay, we've spotted that we're in a strong uptrend, right? Things are going well to the upside and I wanna be a part of that move. I am a trend follower. I like to be buying upward markets. So we see this level here. We notice that price continues to reject this spot on the chart. And so as it breaks out here yet again, right, that resistance being disrespected, the retouch or retest of that level here looks to me like a pretty good buy. Okay, and that's what I'm talking about when I talk about a broken level of support and resistance. So you have resistance that's been broken in an upward trend, meaning that it is likely headed higher, and I'm looking to buy into this. Now, please note before I go too far in this video, whether you're a new trader or more experienced, I am looking at data that I already know what happened. And that's a huge, huge thing for me to say here on YouTube, because a lot of times people will say, well, like, oh, obviously you should have just bought there and rode the trend. And it's very easy in hindsight. The truth is it's very easy to trade on the left-hand side of the screen and very difficult to trade into the future. So I just want to make that clear. I am cherry picking. I am showing good examples here, you know, as examples. It doesn't always work out this easy. It's not always this simple, but this is the general idea of what I'm looking for when entries go my way, right? They don't always go my way, but this is the idea, okay? Excuse me, I have a little bit of a cough here. But so like I said, I'm looking for these three things. These are sort of the main spots of interest for me, is looking first for a trend, looking for a pullback in that trend, using support and resistance, and actually another one that I really like is actually Fibs. And there's mixed opinion on pretty much everything in markets. There's, you know, people who say, nah, that's no good, and other people like it, and etc. But for me, I do like the idea of using Fibonacci retracements as a tool. They're not by any means the holy grail or perfection, but you know, drawing things like this. If you're not sure how to draw fibs, I do have a video on that. Feel free to check it out. But the idea here is drawing fibs like this. You could have said, okay, well, here's the low, here's the high. It gave us the 38.2. the 50% retracement, and the 61.8. Depending on what you like to do and what your strategy is, you know, you may be looking just for the 61.8, you may be looking for the 50%. For me, the 50% would have probably looked interesting here. And then, you know, price did a little bit of a rejection candle here. So maybe you're looking at this and you say, oh, there's a nice candlestick pattern, right? Which could add even another one. We'll put candle patterns. Right? Some people really like their candlestick patterns. I do as well. I do like to see like rejection at a level like this. You know, this sort of signal just shows us, okay, well, there was a lot of buyers that stepped in there, may be willing to push this thing higher. Of course, like I said, we are looking at hindsight here. We know what happened. It is clear that the market trended higher. But again, this is like what I'm looking for, right? This is the ideal scenario. It doesn't always work out. You might get something like this and then price continues lower, in which case we can talk about exits, which is a really, really important topic as well. So again, the thing here is I want you to pause here before we go any further in the video, and I want to let you guys in on a little bit of a clue that I wish I had learned much earlier on in my trading career. When it comes to entries, right, everyone is so interested in entries because everybody wants to get the timing right. They want to get right into the market just before it launches up so that they have no pain and there's no struggle and everything is jolly, good, and easy in their trading. But what do we know about trading? Trading is difficult, right? If it was easy, everybody and their mom would do it, right? Everybody would be trading. So it's not always that easy. Sometimes you go for an entry, price doesn't go your way. Maybe you get stopped out, then it reverses. Maybe you do get a great trade and that's awesome, but it doesn't happen like that every single time. And so my point with telling you that here is that there is also an equally important discussion to have, not just about how you enter the market, but how you get out of the market, okay? And like I said, I have whole videos on that subject, but today we are going to be talking specifically about the entry. For me, what that generally means, is I'm looking to get into a market when I see a nice signal like this, and I'm also looking to keep my stop loss in place, not too tight, but also not so big that I'm taking massive amounts of extra risk. Obviously, in hindsight, I could say, I'd put my stop loss just underneath that, but, it doesn't always work out that easily, right? But generally speaking, I do look to give a little bit of room on my stop loss, not too much, not too little. But again, today's video is mostly about entries, so I'm going to refrain from talking about stop loss placement too much in this video just because I don't want it to get too long. But again, I've got videos on that if you'd like to look at it. Okay, so another thing I want to talk about when confluence comes into play is we've only mentioned so far technical confluences. But in my trading, one thing that I should very, very much mention is that all of this, like I said, it falls under technical analysis, right? But there are also two other categories that I might actually look at, and in fact, in my own trading, do look at when looking at setups. Yes, you've got all these things. These are great tools to consider, and some traders may even just use those. But for me, I like to add other things. The next one is going to be fundamental analysis. You might have never heard of fundamental analysis. If you're a newer trader, what the heck does that mean? It actually doesn't even use this chart very much at all. What it does tell us is it looks at things like unemployment in that country. Because remember, when we are trading currencies, we are trading basically the currencies of major economies, and the major underlying economies are what drive the value of the currencies that we are trading, right? Now, if you might say, well, oh, I trade gold. Well, gold also relies heavily on fundamentals. And if you're trading the indices, it also relies heavily on fundamentals. So for me, it would be not the full picture to leave out completely the fundamental analysis perspective. So I may be looking at things like unemployment and monetary policy, which again, these are big words and they might sound like nonsense too, but I promise, these are real world events that are driving the prices of the currency market up or down. So you have unemployment, you have monetary policy, you have inflation, right? You have interest rates. All of these are important topics that I think you can't completely ignore if you're going to be paying attention to the foreign exchange market. And especially if you're out there and you want to be a professional trader, you need to know what these concepts are and how they might impact the trades that you are placing. It's great if you have a trend and it's pulling back on the 1 hour, the 4 hour chart, and that all looks good. But if you have news that could completely go against you, you might be missing out on some important information that is, going on. And I'm not just talking about economic calendar stuff. Yes, that is important, and that's what sort of ends up, impacting these things, but not just, trading the news or ignoring the news, but rather actually trying to interpret and find the trends that happen due to fundamental analysis. I'll give you a quick example here. I picked the AUD USD for a specific reason. During this time, I actually was very long biased when looking at the AUD USD. You might ask, well, why? Here's some context as to what was going on during that time. During that time, you had pandemic recovery. Now, if you're watching this like 3 years recovery, if you had, if you're looking at this like 5 years from now or 3 years from now or whatever, when I post this video, you might be like, oh yeah, I remember the pandemic. Well, right now we're sort of still coming out of it at the time of making this video. So you have pandemic recovery. And what does that have to do with the AUD USD currency pair? That sounds sort of, disconnected, right? Well, actually, it is very connected. The Australian economy is heavily based on trade. And so when the markets are terrified of a pandemic and you see, major slowdowns in economies, that can cause the Australian economy to do very poorly. Well, so same with the US, but especially the Australian economy, because during that time, if everything is shutting down, people might say, hey, well, you know what? If the whole world is shutting down, I would rather bet on the US, which is a much more stable, big time economy than the Australian one. So people might sell the Aussie and buy the US. But on the flip side, during a recovery phase, you have people taking their US dollars and saying, oh, well, I'd rather actually bet on something a little bit higher, higher risk, higher reward, which is the Australian economy, which is, again, heavily based around trade, things like that. Their economy tends to do quite well in a recovery and in a global, growth spurt like we've had here in, second half of 2020 and 2021. So that's what I mean by, building a long bias that is not just based on the charts, but also on the fundamentals. And finally, the sentiment analysis is going to be the last component that I look for when taking trades in my own personal trading. So what I mean by sentiment analysis is that if we're looking at this chart, what is everybody else thinking? And more specifically, what are the retail traders doing? What is retail doing? And what is, we'll call it institutional traders. So what are the institutional traders doing and what are the retail traders doing? If the retail traders are short this market, right? If they think this market is going down, that's an interesting component of data that I can use to incorporate in my trading strategy, right? If I know that the retail crowd, which by the way, remember, loses money, we could also just politely call these ones the losers, and I don't mean offense. I'm a retail trader, so most of them are losing, not all of them, but most retail traders are losing money, right? So if we know that most retail traders are shorting this market, most of them lose money, and then meanwhile we see institutional traders going long on this market, this is valuable information. This is information that tells me, okay, this might be an added confluence. It's not the only thing. Remember, all of this has to do with confluence. I'm using all of these components to line up the probabilities to take winning trades more often than losing ones, or at least take trades that give me a better chance of doing okay, right? Then, in all summary, if I know that the retail crowd is short biased and I know that the institutional crowd is long biased, I would probably rather bet with the big guys, the ones that make money, right? We know that institutional traders make money. There's some crazy stats out there, like I think Goldman Sachs had like some 90% winning days of a year. Sometime I read at one point. Don't quote me on that, but go do up your research and you'll see. Like a lot of institutional traders, institutional firms, banks, hedge funds, things like that, they do quite well for themselves. They know what they're doing, right? They're professionals in this industry. Just like if you went to the hospital and were there for a doctor, you don't want the janitor doing your surgery. You want the surgeon doing the surgery, right? You want somebody who's very, very experienced. Well, if we know that in this industry, that is going to be your institutional, professional hedge fund traders, and knowing what they want to do is much more interesting than what the average crowd person wants to do. How do we access this data? Well, it's on our website. You can pull up a1trading.com and you can go to the retail sentiment. You can also go to the COT reports, which is going to be another video that I've got available. So you can look up on Trader Nick. If you look up on YouTube, Trader Nick COT, you can find videos that I've done on this topic. If you are very interested in that, if you want to see what institutional traders are doing, by all means, go check out that video. Again, look up COT Trader Nick, and I'm sure you'll find it here on YouTube. So that's what I'm thinking about when it comes to entries. I know this was sort of a longer video. I hope you stayed to the end. If you did make it to the end, do me a big favor, comment down below. It does mean a lot to me when you guys make it to the end of my videos. I take a lot of time and effort to research and create these videos for you. If you did enjoy them, make sure to hit that like button down below, like I mentioned earlier. And again, all of those free resources on our website are available to you. So head over to a1trading.com. Before I go, I do want to say, if you're not already inside of our Discord and you would like to join our Discord, you can join up and see all the trades that I am taking, as well as access our chat rooms. We've got webinars that are going on with our private coaches. There's multiple analysts that lead our group. We have a paid staff here in Atlanta, Georgia, that sort of do all the work behind this group. So if you would like to come join us, you can see the trades that I'm taking in full. You also have access, like I said, to a chat room and things like that. So if you're not already inside of the Discord and you would like to, check it out down below in the description. And there's a promo code for my friends here on YouTube supporting the content as subscribers. If you made it to the end of the video, use that code down below and you'll get a discount as to how you can join the group or join the Discord. Guys, thank you so much for being here today. Have a great rest of your day. Happy trading and trade safe. We'll see you next time.